All right, we're back for another episode of the REMO Show. Today, sitting here with Derek and Tyler, we're going to touch on some of the recent changes in the real estate market, specifically when it comes to government changes here in BC. Flipping tax, the house flipping tax is going to be a hot topic, and the property transfer tax exemptions when it comes to first-time buyers. So I'll pass it on to Tyler to get started.
These changes that just came afoot, like there's still some details that are coming out. They're, depending on when you listen to it, they're a few weeks old now. But the big one, and this is especially exciting if you're a first-time home buyer, is they've increased the threshold to avoid paying a certain amount of property transfer tax. So the current rules that are in place now, and all of these rules are supposed to be going into effect starting April 1st. I mean, I think we're still waiting for a little bit of clarity on if depends on when contract is written. But as far as we understand it, for any homes, any completion dates after April 1st, 2024, the property transfer tax exemption limit is being increased, right? And this gets a bit numbery, so I'll try and make it as easy as possible to understand. Previously, if you were in BC and you're purchasing your first home, as long as you were keeping that price point under $500,000, you would pay zero property transfer tax, right? So depending on where and what you want to buy, especially, the three of us live in the Lower Mainland, $500K probably doesn't get you much, or maybe not into the home that you wanted. So that exemption limit didn't really help a lot of people. If it did, great. Like the conversation I always have with clients, if you're buying your second home and it's $500,000 and you're putting 50 grand down, you're not just putting 50 grand down. There's an $8,000 sales tax that gets added to your loan. That's not money you can borrow. That's extra dough you're bringing in on completion. It's sales tax. So now they've increased the limit all the way up to $835,000 with a little bit of a tweak, right? So you're still getting the exemption. And the example I'll use is if you're a first-time home buyer, you found a place you want to buy, the number is $700,000. So under the current rules, you will pay zero property transfer tax on the value up to $500,000, and then you pay a 2% tax between $500,000 and $700,000, which is $200,000. So at the end of the day, if you're a first-time buyer, you're buying a home worth $700K, your property transfer tax bill is $4,000. Where previously, and if you're completing a purchase this month, for example, in March, your bill would have been $12,000. So what that means to you as a first-time home buyer moving forward, in that example, you're saving about $8,000. So $8,000 is a pretty good chunk of money. Maybe that gets you a few extra square feet. Maybe, I don't know, you're buying something a little bit older and now there's a den, or maybe you're furnishing the home with the extra $8,000 that you have. So it's, I don't know, in my opinion, a pretty big needle mover. I mean, we've seen the government raise these property transfer tax thresholds before in the past, but they've been minor changes, like $25,000. Like the last one we had was in 2017, where they changed the property transfer tax limit from prices from $475 to $500K. And, the three of us were definitely all working in the industry. And then when we saw that, we were like, big deal, right? Like a lot of times, not to get political, these things can kind of just be, a way to pump up the current government's tires, saying, look what we're doing for first-time home buyers, and it looks good. But in reality, the impact really wasn't that, impactful. This one seems to be, quite a bit of savings. I know personally for clients that I've moved, I've had two clients, first-time home buyers, that were supposed to complete in March that managed to go back to their sellers and just say, hey, well, can you move this to April? The sellers agreed. They had to pay the seller a little bit of money to do so. But in both situations, they were able to get it done. And it's going to end up saving these guys anywhere from $6,000 to $9,000. So the math there, and I'm droning on a bit here, is you pay zero property transfer tax up to $500,000, and then you're going to pay 2% between the difference of $500 and $835. So you take whatever your purchase price is, subtract $500, multiply that by 2%, and you'll get your property transfer tax, or just give us a call and we'll do the math for you.
The one comment I just wanted to make is for once, like we actually see the threshold actually makes sense in our province. For the longest time, especially in the Lower Mainland and downtown Vancouver area, like this threshold, you couldn't even find properties for this threshold. Most people were buying their first home for a purchase price above $500,000. So now this actually makes sense for a first-time home buyer in our market, which is nice to see. And to Tyler's point, like moving it to a point that's actually moving the needle.
Yeah, I mean the barrier to entry just got a little bit easier, right? So if you're on the fence and you're saving up to, to accumulate the funds that you need to get into the market, I would definitely make sure you have a good understanding and figure out, how much easier it just allowed you to get into the market. So the second big one, this is the newly built home exemption. So these are for brand new properties you're buying from a developer. You are paying GST in these situations, so consider that, which is almost always factored into your purchase price when we're looking at financing. So this has gone from 750,000. That's actually currently the exemption limit. It's gone up to 1.1, which again is a massive change. There's going to be some pretty drastic savings on that. There's also partial exemption from 1 million, 1.1 million up to 1.15. So there's partial on that 50,000. So again, this is, previously the changes have been quite minimal, and this actually, these are 25-30% increases, and the tax amounts are quite drastic. So it's good to see these coming into play. I think it's going to help a lot of people, and it's steering everything in the right direction.
Yeah, I mean, it's nice to see these changes. There's no doubt. I mean, this doesn't obviously address any of the issues with new homes being built, but hopefully, it's a positive direction to say the least, and that's always nice to see. So I'll take away the flipping tax. This has probably been one of the most talked about items of these changes that I've had as of late, and this is a new tax that's targeting home flipping activity and short-term speculation. This is going to officially begin January 1st, 2025, so there is some time to prepare for this. I know any folks that have been buying pre-sale properties, maybe feeling a little bit of anxiety and hoping those things complete if their goal was to ultimately flip those for speculation. That's been a big investor, a big demographic of investors have purchased pre-sales for just really the sole reason to flip them. So this is definitely going to hit that nail on the head. There's no doubt. And I mean, we talked about this regularly just in general conversation. And we've always said, looking at a pre-sale, buy one of those with the intention to close on it. Ultimately, buy it with the intention to close on it first and foremost. That should be your first course of action. But this tax will essentially apply on the sale of any residential property held by an owner for less than 2 years. So with the seller being taxed up to 20% of the income from the sales, which is significant. To specify, these are properties that would be sold within 1 year. Are taxed at 20% and will decline to zero between 366 and 730 days. So exemptions may apply in certain circumstances. So, I mean, there are some exemptions that have been talked about that nothing's been hardwired on that front. I don't know how much too much we want to talk there, but I know like in the case of death and in certain situations, there are going to be exemptions. So we'll certainly bring more feedback and content around exemptions when we get them hardwired. But any comment on that?
Yeah, I mean, like you said, I think first of all, when we talk to clients, we've never directed people to buy with the plan, like buy a pre-sale with the plan of selling it before completion, because you just don't know where the market's going to be. I think that's a terrible strategy. It has worked for people, especially over the last 10, 15 years, because values have increased. I mean, we've certainly over the last 5 years anyways, we've seen some roller coaster and a bit of waves, and we've seen people coming up for completion and their properties appraising at $30,000 less than what they paid. So it's always been a poor strategy in my mind, although it has worked for some people. And if people are in that bucket, I would start to figure out your financing, and I think that's the biggest key. Like, people bought these properties not caring if they were going to qualify for the mortgage or not, because it's we'll just sell it and figure it out. So I would get on your financing as early as possible. It's probably going to make a heck of a lot more sense to do everything you can to close on that property, even if it means co-signers or alternative lending. Rent it if you need to, and ride it out until you're through past the 2-year marker.
Yeah, I guess the only thing I'd have is this one definitely has some teeth, right? This is going to bite investors pretty hard. Like, I would say from the real estate crowd, they're really pushing back against this. Like the realtor crowd, I would say, and like I do understand a lot of their beef with this too. Their concern is that investors bring a lot of this product to market, right? A lot of the times, the people buying these pre-sale condos, if the intention is to flip them, it's because it's a future bet, right? They have the money today, they can put it down, and they want to wait and see what the market does in the future, and then sell it to the open market, right? For the most part, people trying to buy today to occupy the home, first time buyers, they're looking for stuff available to close in the next 1 to 4 months. So this potentially could dry up the pool of those investors like purchasing these products. And plus, developers rely massively on these investors, right? Just so people know, like if you see a developer going to build up a new project, like they can't even put shovels into the ground really until they sell 60% of those units, because the bank is only going to advance them the mortgage to start developing that property when they've sold 60% of the units, right? So that's why it's called a pre-sale. And if they can't do this because all of a sudden all the investors are like, well, no, I'm backing out, how many projects does this kind of start to shelve? And maybe does that put more supply crunch on? I'm not saying this is my opinion, but I think it's a valid point that I've heard a lot from, the realtor crowd. So we'll see. It'd be interesting to see what happens. If you're looking to buy a condo, there could be some pretty good opportunities coming in the next 6 to 8 months, because there's going to be a lot of investors trying to offload this product before January 1st, which is when this tax is supposed to take effect, right? So a lot of this stuff too is probably fluid. There'll be some more changes in rules and criteria that are probably going to come out over the next 6 to 9 months. But this one definitely has some teeth, are my only thoughts.
Yeah, it's a good point. So like you kind of answered the question I was about to address here, just in regards to listener interaction and some of the questions that we've been receiving on this topic. And the question is, where would the opportunity be in regards to some of these changes, and specifically this flipping tax? And you just nailed it. Like there likely is going to be more opportunity from a buyer perspective over the next remaining months of this year, because of potentially increased inventory for this reason. So, in addition to that, I would see some opportunity from a seller's perspective to maybe hold off and maybe sell the following year, considering that a lot of people are going to be selling now just because they have to avoid this tax. Where if you've been sitting on some real estate for more than a couple of years, it might make sense to kind of wait to sell. What would you say to that?
Yeah, maybe, or maybe they would try and offload the property now before these projects come due. So I don't know. It's going to create some volatility in the marketplace. I think maybe short term there'll be more supply because of all these people trying to offload their properties before this. But again, I'm just wondering about the long term impacts for future projects. If investors aren't putting money into these, then how many of these projects aren't going to go ahead? And that's the exact opposite thing that the government's trying to do, which is increase supply, help buyers. But I mean, we see it all the time. A lot of times when government meddles with open market economics, it ends up having the opposite impact. Again, I'm not saying this is what I think will happen, but it could.
Yeah, it's a good point. I mean, it's at the end of the day, like some of this stuff is a little too early to tell. And we'll definitely keep a close eye on all of this and continue to talk about these items as we kind of progress through the market and the rest of this year. And for anyone that has any feedback for us, any questions that you want us to address on the show, certainly reach out to us, leave us a message. And if you think we did a good job here and earned a 5-star review, that would be very much appreciated to receive that if you think we earned it. And other than that, on to the next one, and looking forward to it.